Well, the liquidity battle between the government and the Reserve Bank of India continues to rage on. Now, the government is claiming that liquidity constraints are crippling growth, but the central bank released data to claim that credit growth remains healthy. Now, the Reserve Bank of India, their data showed that the credit growth in fortnight ending October 26 was at 15.9%, and the fortnight ending November 9th, it remained steady at around 15.6%. The Reserve Bank of India also released data to show that loans by NBFCs saw a growth of almost 18% in the first quarter of this fiscal, and it improved even further to over the 20% mark in the second quarter. Responding to the data, Economic Affairs Secretary Mr. S.C. Govt told cnbc TV 18, and I quote, "The NBFC problem started only in September. Therefore, we need disaggregated monthly data for assessing its true impact." End of quote. We in fact spoke to experts on what they make of this report. Let's listen in to what they had to tell us.
Clearly, the issues remain outstanding. And by the way, it's not just about liquidity and credit growth. It's also linked to the other two issues which were discussed in the 19th November board meeting, i.e. relaxation of strictures on the PCA banks, as well as around restructuring of loans to the MSME sector, all of which are linked to liquidity. All it tells us is that the battle lines and the differences between the RBI and the government endure even today. Nobody seems to have arrived at a compromise as yet, and therefore watch the space. But by the way, the statistics which the RBI has released is obviously right. Money is available in the banking system if it is required. Banks are sitting on excess government securities. They can convert them into cash and lend them where required. I think the problem really is certain names are probably finding it difficult to find liquidity. It's not really a systemic issue. It's probably an idiosyncratic issue. And I guess that's the point that RBI is making. In that, you can't dispute the numbers given by the RBI.
Figures given by RBI are not correct, but apparently they are a little dated. The NBFC sector, which was become a major lender to certain sectors, particularly real estate and certain other consumption-related sectors, would have definitely their credit growth would have slowed down after September, if not exactly gone into negative. They have, it's a common knowledge that they have sold portfolios to banks, and they have agreed not to lend even a single rupee additional because they have to watch their own balance sheet and they have to see that they don't default on their CPs or other liabilities which are coming up for redemption.
Sticking with more news coming in from the RBI chambers, days after the 9-hour RBI board meeting and the friction with the government over several contentious issues, Governor Urjit Patel deposed before the Parliamentary Standing Committee on Finance. Now, from the state of the economy to the autonomy of the central bank, sources say the governor was quizzed on a wide range of issues. Rituparna Bjorn is here with the latest. Rituparna, over to you.
This is the third time since June last year that Urjit Patel has briefed the same panel of parliamentarians, which is headed by Veerappa Moily, and he was quizzed on several issues, right from demonetization to the state of the economy, NPAs, credit growth, as well as the recent friction that we saw between the Reserve Bank and North Block on issues like autonomy and reserves. Now, as far as the state of the economy is concerned, Urjit Patel told this parliamentary panel that prospects look bright as far as the economy is concerned, because the RBI believes that that crude prices will be on a downward trajectory, and this will benefit the economy. As far as credit growth is concerned, RBI believes that it's robust and is seeing a growth of around 15%. As far as demonetization is concerned, Urjit Patel said that the impact was transient on the economy. But on other issues like autonomy of the Reserve Bank, on reserves, etc., he did not provide any answers. But according to sources, many of these queries which were raised today will see the Reserve Bank getting back to this panel through written answers, and these written answers will be given in the next 10 days. With that, it's back to you.